for another update. Let's take a look at XRP over here on the 30-minute time frame. And going all the way back to April 7th, we have a 5-way move to the upside in the form of a leading diagonal. Notice how the waves are overlapping here. And then we have a little bit of a throw over of that diagonal, signaling that that is the top of your wave 1. We then come down for your correction, and we were making a video over here saying that this is very likely to be a false break because we were unable to get above the 1.382 extension. You see this 1.382 extension measured from this April 13th high down to the 20th. It wasn't able to get above it, so it was very likely that we're going to see the next leg within the correction. But this last leg within our wave 2 terminated at the 786 and the 702. We also had a little bit of a back test of the 200-day moving average, this yellow line over here, and on the high time frame that would just be considered your test after your spring. So don't forget, this is our Wyckoff reaccumulation range. This over here was your spring, right? A pierce below the 200-day moving average and then a reversion back into the range. This is your ABC correction down for your test, and now we're going in for the next leg. In the market, with the retracements being at 271 and 289. Now, as you guys can see, we have wicked into this. We have tapped into the 61.8% fib at $2.55. So there is a possibility we see a little bit of a back test of some lower levels. That would be sitting at 236 and $2.30. $2.30 is where the 50-period moving average is on the 4-hour time frame. So on the high time frame, if we did come down here, it would just look like a high leverage flush or maybe even just a wick before an aggressive move to the upside. That's what I'm thinking here for XRP. If we're unable to get a hourly close above 2.5796 and 2.5983. However, if we are able to get an hourly close above these two levels, then it's very likely we're going to have a little bit of a wave 5 extension towards those higher retracements that I was telling you guys about. I'll make the font size a little bit bigger so you guys can see. You see, we already hit the 61.8% fib, but if you get above these two levels, then it's very likely we're going to go and tap into these three levels over here, because we mustn't forget how the high time frame looks, right? The high time frame always takes precedence over the small time frame, so that's why I always stress the importance of not getting too wrapped into the little movements on the small time frame unless you're a scalper. However, if you're a spot holder, just know that it's very likely we're escaping the range over here. Let me just remove some of the layers so you guys can see. So right here, so this is it right here. Okay, now if we go ahead and just take a look at XRP on a blank chart, you guys can see that the candlestick formation is extremely bullish. This was your deviation below the 200-day moving average and below our Wyckoff range, or our reaccumulation range. Notice how we pierced below the 200-day moving average on the weekly. Right, this was your death candle closing at the lows of the range, sitting at $1.92, and that was a very nail-biting moment for a lot of people in the markets because we never really closed down at these range lows. And then the week after that, we pierce these lows. Mass panic enters into the market. We have a reversion back into the range, form a doji. So this is, you can kind of consider this like a piercing line reversal candlestick pattern. Very similar to that of what the S&P printed over here. Like if you take a look here, this is your piercing line reversal on the S&P. Now we're above the 200-day moving average. We actually gapped up yesterday. Very, very bullish. But yeah, let's go back to XRP. This was kind of like that piercing line reversal. And then we had a doji the week after that, a bullish engulfing the week after, another doji, and then last week's candle pierced the lows of the previous week and back tested the 200-day moving average. Now if we go on the 4-hour, we're above the 21 and 50 period on the 4-hour. So we're above all of the major EMAs as well. So there's no doubt that we are trending up So yeah, this looks really good. And then coming back to this candlestick chart, we can see here on the daily, so I was just showing you guys the weekly candlestick formation here. Now on the daily time frame, yesterday's candle, we had this wick over here, right? So now there's going to be a lot of people shorting this, putting their stops here at this wick, with the anticipation of a move back down to backtest those lower levels I was showing you guys. However, I actually think we're going to go ahead and fill this wick in. This is my bias. I think we would fill the wick in from 254 to 265, maybe tomorrow or the day after tomorrow. But today's daily candle looks like it's going to close as a doji. So we're probably going to go sideways today, right? And notice how the low of the day also wicked towards the 50 period moving average, or sorry, the 21 period. So this is the 21 period right here. Notice how the low of this day wicked towards it, right? So now, like I said, going forward, in order to confirm a move higher, in order to confirm that we're going to take out these highs, I would want to see that hourly close above 257 and 259. Okay, so coming here on the high time frame for XRP, let me just remove these layers so you guys can see. This is your macro count over here. This was a huge pennant, a huge wave 4 pennant spanning for over 2,400 days. And at the apex of this pennant, you have Wyckoff reaccumulation, schematic number 2, I believe, where you just chop mid-range. You don't come back down to backtest these lows. You just chop mid-range and then you pop off to the upside. So it does look like we are within wave 5 of 5. And it's wave 5 of 5 within a parabola is the most steepest, or the steepest wave out of all the waves, and especially in crypto because it's such a highly over-leveraged market, right? Going all the way back here, this was your wave 1, your wave 2, 3rd, 4th, and now we're within wave 5 of 5. Now the 4.236 extension is sitting at 13 to 14 bucks. Now there is targets before that I want you guys to ladder out at. I will be posting that on my Patreon, so definitely click the link in the description below to join the Patreon so you guys can see all of those exit targets. I have updated the targets considering how this played out, right? I have updated the targets, so definitely go ahead and check that out. But like I was saying, what we want to see here going forward is just a 4-hour push, or sorry, an hourly push above 257 and 259 in order to confirm that we're going to go ahead and fill in this wick and get above this level towards the higher retracements within this reaccumulation range. So ultimately, I do think that XRP is going to get back up to the top of this range. So if you are a spot holder, keep on holding, because it looks like we're on our way to escape this range towards 480 here, around 480. 450 to 480, that would be the first point of interest. Okay. But yeah, hope you guys enjoyed the video. If you guys have any questions, please feel free to let me know. And if you love the content, then click the link in the description below to join the Discord, where you can connect with me one-on-one, get access to over 350 assets, and ask me any question you want, along with staying updated with all of your favorite coins, including XRP. Peace out. Take it easy. See you in the next one.